Welcome to the deep dive. Today we're jumping into something really interesting in the financial world. It's called the NASDAQ Golden Cross. We've got some fascinating material here, really fresh, from Lucas Downey over at moneyflows.com. It's dated just today, June 26th, 2025. So our goal, our mission, if you like, is to unpack what this Golden Cross actually is, what it could mean for the market, and maybe most importantly for you listening, what history suggests might be coming down the pike, helping you stay truly informed.
Yep, absolutely. And the timing feels, well, significant, doesn't it? Wall Street is definitely buzzing. You've got growth stocks hitting all-time highs. I mean, look at the big names leading the AI race. Microsoft, NVIDIA, Broadcom, they're just, wow, soaring. And what's really interesting, the material suggests this isn't just, hype. It says even the current pretty optimistic estimates for future earnings might actually be, well, too low, and that they massively underappreciate the acceleration we're seeing in tech. Things like robotics, agentic AI, even physical AI.
Okay, right. Let's unpack that term then, Golden Cross. What exactly is a Golden Cross when we talk about finance?
Okay, so put simply, the NASDAQ Golden Cross is a technical signal. It happens when the 50-day moving average, that's the 50 DMA, sort of the shorter-term trend, crosses above the 200-day moving average, the 200 DMA, which tracks the longer-term trend. We're talking specifically about the NASDAQ 100 index here. And, it's often seen as a bullish sign.
Bullish. Okay.
Yeah. And maybe to give it some context, you might remember back in April, there was a lot of noise about a death cross in the S&P 500. You had the prophets, as the source calls them, warning us. But interestingly, that death cross, contrary to the warnings, actually turned out to signal an incredible upside opportunity.
Really? How did that happen?
Well, because another indicator, the Big Money Index, or BMI, was violently rising. That meant big institutional money was actually flowing into stocks, even as that death cross was forming.
Yeah.
Just shows how, data has a way of cutting through the noise.
That's a great example. Data cutting through the noise, even when the headlines look scary. Okay, so let's bring it back to today. The NASDAQ 100. It's just had this golden cross. But the source mentions that just looking at the chart, the eyeball test, it isn't immediately obvious if this means up or down.
Exactly. It doesn't always jump right out at you.
Yeah.
And that's precisely why we need to look back. We need the historical perspective.
So what does history tell us? You mentioned looking back 30 years. How many times has this happened before?
Right. So over the last 30 years for the NASDAQ 100, we've seen this golden cross formation 17 times before this one. And the big question is it really a holy setup for stocks, as Lucas puts it?
And the verdict is?
The historical verdict, yes, it really seems to be. The data, especially post-2009, is pretty compelling.
Oh yeah, post-2009. Let's hear those numbers. This is where it gets really interesting, right? Especially if you're thinking longer term.
It really is. So after these golden crosses, post-2009 specifically, 3 months later, the NASDAQ 100, the NDX, was up an average of 9.8%.
Wow, nearly 10% in 3 months. Okay.
Yeah. Then 6 months later, it jumps, on average 13.1%. Fast forward 12 months, a year out, and the average gain is 23.4%.
23%, that's substantial.
It is. And if you look out even further, say 24 months, 2 years, you're looking at average gains of 53.2%.
53% average gain over 2 years. Okay, those are some serious numbers. But why the focus just on 2009 and later? What's special about that period?
That's a really key point. It's about finding the right historical parallel. The source argues that the recent market action, this tariff crash and rip, that sharp drop on trade fears, followed by a quick recovery, it's following the playbook from the COVID-19 crash to a T.
The COVID-19 analog, how so?
Remember back in 2020, we had that initial really scary forced selling event? Everything went down hard. But then the market recovered, had what they call a blow-off top sort of final surge, but then kept going higher afterwards. It was like a dump and bump pattern for the S&P 500. And the analysis suggests we're seeing a very, very similar pattern play out right now with this tariff situation.
Huh. So when we look at this recent tariff crash and recovery, it's like deja vu all over again.
In many respects, yeah, the comparison seems quite strong based on the patterns. And this brings us to something else mentioned in the material, these green bars.
Green bars, what are those?
They represent specific stocks, individual companies, that institutions are buying up heavily, like really gobbling them up. These aren't always the big, flashy names everyone's talking about. The source describes them as often being elite, small, and mid-cap stocks.
Ah, okay. Not necessarily the household names then.
Not always. They're called compounders.
Yeah.
Companies that just consistently grow their earnings. They tend to have accelerating earnings, which is a great sign. And critically, many have strong AI tailwinds, meaning AI is a real fundamental boost to their business, not just a buzzword. They're the outliers, the companies that smart money is finding often before they hit the mainstream radar.
Right. So this golden cross isn't just a broad market signal. It's also potentially highlighting where the smart money is flowing into these specific types of potentially faster growing companies that maybe aren't getting all the media attention yet.
Exactly. It's about connecting the dots between the big picture signal, like the Golden Cross, and where the actual investment is happening underneath the surface. It suggests looking beyond just the mega caps, maybe finding these tomorrow's leaders, as the source calls them.
Finding tomorrow's leaders. I like that. It suggests a more proactive approach.
It does. It requires maybe a bit more digging than just following the headlines. But the idea is that these small and mid-cap compounders, especially those leveraging AI effectively, could offer significant growth.
Okay, so let's try and wrap this up, bring it all together.
Sure. So the main takeaway here is you have this NASDAQ 100 Golden Cross. That's the technical signal. It's backed up by some pretty strong historical data, especially post-2009, suggesting significant potential upside for tech. And this is happening in a market context that looks remarkably similar to the post-COVID recovery pattern. Plus, underneath it all, you see institutional money flowing into specific types of innovative companies, those green bars, the emerging leaders.
So putting it all together, it paints a potentially very positive picture, particularly for tech and these specific growth areas.
That's what the analysis points towards, yes. Significant potential upside.
Okay, so here's the final thought for you, our listener. Given these historical patterns, this golden cross, the parallels to past recoveries, and this incredible acceleration in technology, how might you rethink what's really possible in the market over the next, say, 12 or even 24 months? And maybe ask yourself, what does it mean to be bold right now, especially when maybe others are still feeling a bit hesitant? It really does sound like it could be a golden opportunity.